But today's conversation is not about Miller Opportunity Trust, it's about his personal portfolio. And here's the headline: half of Miller's personal net worth is in Bitcoin and a few other cryptocurrency investments, and it's leveraged. I asked Miller why he has gone so big on Bitcoin in his personal account.
I'd say it's a combination of things, as it would have to be to allow something to get that big a part of your portfolio, because you know it goes against many of the tenets of financial discipline. On the other hand, the people that actually are the richest people in the country all are massively concentrated. You know, Buffett and Berkshire, Jeff Bezos, Mark Zuckerberg. So they're not widely diversified. They're highly concentrated. And I think that's because they have a high degree of confidence, or have had a high degree of confidence in the value of those investments. But my thinking here was that you know, I heard a talk on Bitcoin given by the person who's known as Patient Zero in the Bitcoin world, Wences Casares. And Wences gave a talk at the Allen & Company's Sun Valley Conference, and he led off his talk, this is 2014, I want to say. He led off his talk by saying that, asking how anybody owned Bitcoin. No, nobody in the audience owned it, except for him. And did anybody know what it was? And a few scattered hands went up. And he said, well, let me explain to you why I own Bitcoin. And he said, and it's because I understand why you wouldn't understand it, because you all live in America. And you have a rule of law, and you have you know, orderly governments. And in most times you have, you know, relatively low inflation and a prosperous economy. And he said, but I'm from Argentina, and my family's been there 150 years. And we've been wiped out 4 separate times by the Argentinian government, seizing our assets, nationalizing the banks, inflating us out with hyperinflation. And he said, so Bitcoin can't be touched by the government. It's a peer-to-peer, decentralized, independent network. It's a ledger that records every transaction that's public. It's immutable. And he said, so the government, if you have Bitcoin, the government cannot take it away from you. And he said, so think of it as an insurance policy. And he went into it and talked about it. And I thought, you know, and he talked about putting 1% of your liquid net worth in Bitcoin. And I thought that was sensible. He laid out what it could do if it worked. He said then that it was very risky, because then it was about $200. But I bought some then, and I bought a little bit more over time, and it became $500. And then I stopped buying it. And I didn't buy it for years until just the spring of this year. It hit a $66,000 high price. And then in 4 weeks, it was in half. Now, Bitcoin has gone up on average 170% a year for the last 11 years. Now, but that's not every year, it's just an average. It's gone down 3 different times by more than 80%. So that is, you know, a very volatile and therefore very dangerous, especially if you're levered, as you can be if you're on some of these exchanges that'll loan you 50 to 1 on your Bitcoin. But each time it's been stopped at around the low 80s level, and it's come back. And this time I started buying it again at $30,000, down from 66. And my reasoning was, there's a lot more people using it now. There's a lot more money going into it in the venture capital world. There are a lot of people who are skeptics who are now at least trying it out. And I thought maybe 50% is a good stopping point for it. But if it goes back down to 80 or 85, I'll buy it all the way down. Well, it did stop right around 50%, and it slowly started its way back up again. But I bought a fair amount at the $30,000 range, and have been adding to various Bitcoin-related investments since then. So there's a company that that we own in our income fund called Stronghold Digital, which is a Bitcoin mining company, where the CEO owns 35%. It looks like they could make $6 to $8 in a couple of years, and they're a very low-cost miner of Bitcoin. And all their energy that they're using, the electricity usage, is all renewables, or it gets credits for cleaning up abandoned coal mines. So it's one of those things that, I mean, as much as I like Bitcoin, I've bought Stronghold in here and own it also via the fund, as well as MicroStrategy and some other companies.
So it's an insurance policy? Is that how we should look at it? I mean, number one, you don't live in Argentina. You do live in a country, with a rule of law, and I'm not sure the dollar is really a stable currency, but it certainly holds its value. Somebody else could create another Bitcoin. It's not governed by any rule of law. So, why such confidence in it as an investment, aside from the fact that it certainly has worked really well and more people are kind of jumping on the bandwagon?
There's several different ways to approach that.
Yeah.
I would say that right now, it's best thought of as digital gold. So gold is, as people have said, a store of value for 5,000 years.
Right.
And gold is what people typically fled to when the governments tried to, inflate them out. And in the United States, Franklin D. Roosevelt confiscated everybody's gold in 1933. You had to turn it in or you went to jail. So they can't confiscate your Bitcoin because there's nothing, you hold it securely. As long as you have an internet connection, you can send it somewhere instantaneously at very low cost. And the reason I like the insurance company analogy is because if you think about, people talk about the intrinsic value of Bitcoin. This is a Warren Buffett argument, that Bitcoin has no intrinsic value. It doesn't have any earnings. It'll never pay any dividends. And so how do you even think about something like that? It is a new technology. It's something that couldn't be done before. But in any case, the answer that I have to that is, well, I mean, what's the intrinsic value of that Mickey Mantle baseball card that sold for $5.5 million? It's just cardboard, and it doesn't even have a legend. It could be counterfeited very easily. Or what's the intrinsic value of a Picasso painting, which is just canvas and paint and maybe a frame? But people will pay millions or tens of millions of dollars for it. And so it comes down at the very basic level for supply and demand. So Bitcoin is the only economic entity where the supply is unaffected by the demand. So even with gold, if gold, which is $1,800 today, if gold goes to $18,000, there will be a lot more gold mined because mines that are unprofitable will become profitable. And so gold, which accretes today, the production of gold is equal to about 1.5% to 2% of the total value per year. That's the same accretion that Bitcoin has currently. But this year, 2022, I think will drop below 1.5% on that. So only 21 million Bitcoin can ever be created or close to it. It doesn't matter if Bitcoin is 100,000 or 20 million, there's only going to be that many of them. So all you have to really believe is that the demand for Bitcoin will grow faster than 1.5%, over the next number of years, and the price inexorably will go up. So I've only recently been allowing myself to be described as a Bitcoin bull. I used to tell people, they say, oh, you're a Bitcoin bull, you own a lot of Bitcoin. I'm like, I do own a lot of it, but I'm actually a Bitcoin observer, and I'm observing its trajectory as a new technology and comparing it to the trajectories of things like the printing press, or the steam engine, or the railroads, or the automobile, or electricity, and it's following that very, not predictable, because it's not predictable certainly in the early days, a well understood path for the adoption of new technologies. And I think it was Stan Druckenmiller said earlier in the year that, and now he owns Bitcoin, by the way, but he said that Bitcoin was a solution in search of a problem. And what I've found amusing about that is every new technology is a solution in search of a problem. Because you have a new technology, then you try and figure out what you're going to do with it. And so, when we created the internet, what are we going to do with that? So the Defense Department had good uses for it, but it was tough for other people to see. But now everybody can see what the value of the internet is. Same thing with the internal combustion engine, which was very dangerous and all, but now that's taken over the world, and now we're going to move to electricity. So all kinds of technologies have to grow into their potential. And Bitcoin is, I guess if you want the theoretical answer to the question, is that's the work of Brian Arthur, Santa Fe Institute, and Stanford, who is kind of the leading authority on what he calls increasing returns economics and what he calls lock-in and path dependence in the economy. So his basic idea is that when technologies reach a certain dominance and they're the leader, it's almost impossible to dislodge them, even without a very superior technology.
And Bitcoin's there? Is that what?
That's what I would say I and the other bulls believe.
Okay, but why the outsized? Why 50% of your personal net worth? I mean, I'm assuming that the other 50% is in like Miller value funds, or I don't know how you've diversified. And
well, actually, close to the other 50% is in Amazon. All of
Okay.
the rest of the investments that I have are basically there to support margin debt. Because I'm typically always on margin, which means I can take a lot of volatility. Now I'm not obviously on deadly margin. I'm using regular Reg T margin, and I've got a fair amount of margin capacity. But the rest of all the stocks could eliminate all the margin debt and have a fair amount left over, and then I'd have those. If I had to sell all those to pay off the debt, then still have Bitcoin and Amazon.
Bill, can you explain to me the concept of Bitcoin as an insurance policy?
There's 21 million shares of this insurance company outstanding. And every day that somebody wakes up and says, you know, I need some insurance in case something, you know, in case the government seizes all the gold like they did back in 1933. Or, you know, when Afghanistan, we pulled out of Afghanistan, Western Union stopped remittances. So if you couldn't get money, and it's still hard to get money in Afghanistan, you were in serious trouble. In Lebanon, the lira has completely collapsed. Venezuela is a failed state, and yet Bitcoin continues right along. That was your insurance policy against financial catastrophe of one sort or another. And what did the Fed do when the pandemic shut down all parts of, threatened to shut down all parts of the economy? The financial markets came unglued, and the normal relationships between cash and bonds and securities, especially asset-backed securities, got blown apart, and the Fed had to increase the money supply by 25% to keep those things from collapsing as they did in 2008.
Right.
During that time, the Bitcoin network functioned perfectly. There was no run on it. There was, you know, prices went down initially until people figured out, wait a minute, we've had a tremendous collapse here, and the Bitcoin blockchain is functioning without any interference at all. So I think that explains it, I think, in a way that many people can understand. If you want a little bit of financial insurance, then buy a Bitcoin or a part of a Bitcoin. The argument I get most often is, why not gold?
Right, which is considered to be an insurance policy against catastrophe historically.
So the answer to that is, in my opinion anyway, gold has gone from been around 5,000 years, so it's gone from, make up a number and say a dime, a nickel in today's parlance. And in 5,000 years, it's gone from a nickel to $1,850. And in 10 years, Bitcoin has gone from a nickel to $57,000. So why would I own gold? Especially since gold in the last 10 years has gone down. In the last 10 years, Bitcoin is the best performing asset category in the world.